Hello and welcome to our year-ender specials Outlook 2025. Today we have with us a market master par excellence to give us a peep into the world of finance as he sees it in 2025 and what asset classes and stock themes he considers as worthwhile investments. I have with me Naren, the CIO of ICICI Prudential Mutual Fund. Naren, good morning. Always a pleasure having you with us.
Pleasure to, very happy 2025 to all the viewers and to all of you.
Thank you very much. Fund managers like you can make all the difference actually to whether it's a happy or a not so happy 2025.
I think it's the markets which do it. It's the markets which do it. Fund managers do it less than the markets, in my opinion.
That's an extremely humble way to start, Naren. But okay, this year, the Nifty at one point, we thought we would run away with a 20% gain. But okay, at 13.5%, 14% this year is a fairly decent one. Small caps, for all the abuse thrown at them and fears that we had, is still ending the year with close to 30%. How does 2025 at the outset look to you?
Actually, there were 3-4 years, when we always used to say consumers look overvalued and it'll underperform, and it kept outperforming. Now, for the last 2 years, we are the butt of jokes, people saying you are always cautious on mid caps and small caps and mid caps keep outperforming. So I think what has really happened is that you have a situation where the only seller in the market is the FII. And FIIs keep selling only large caps. So the small and mid caps are the biggest outperformers in the market all the way from 2021. So the small caps and mid caps have clearly become much more overvalued, but they never fall because the FIIs are only selling large caps. And that has been the situation all the way from 2021 onwards, that we are the butt of jokes in this entire segment. That at all points of time, ICICI Prudential is cautious on mid caps and small caps, but mid caps and small caps always outperform large caps.
No, actually, there will be many like you and many investors as well who repose faith in you simply because of the safety of that argument. So I wouldn't decry it as much as you are. But how will 2025 pan out in terms of this US exceptionalism, which is what drew away all the FII money or much of it? Does this exceptionalism continue? After all, US growth rates are good. And the Trump trade has worked for that country. Do you think 2025 also will continue to see FII drawdowns?
See, this exceptionalism cannot continue forever because all said and done, India's growth rate is much higher than US and will continue to be, because structurally India's growth is much better than that of US. So I do not think it can continue forever. Can it continue for a few quarters? Yes, it's possible, but it won't last for a long period of time. Because if you look at India's macro, it is in very good shape. If you look at current account deficit or fiscal deficit or inflation and compare where we are at this point of time, we are in very good shape. So I don't think it can go on forever. So I think at some point of time, FIIs are likely to come back into the country, and that too into large caps. But the real problem at this point of time is that the domestic investor sees equity as a riskless asset and has been investing. If you look at the number of loss-making companies that the domestic investor is comfortable investing into, that whether that at some point of time will change is the question that we don't have answer. At that point of time, there can be a problem because investors are not looking at valuation. Domestic investors are not looking at valuation. The foreign investor is saying, I want my money back in US at any cost, in dollars at any cost. So they've been taking out money. But the domestic investor is possibly not risk averse at all. And for the last 10 years, we have not had a down year. So people perceive that equities is a riskless asset, which it is not.
Yeah. I mean, shares must rise for earnings and not for flows. That's the fundamental lesson we have learned for the last 2-3 decades, haven't we? You can't buy a stock because others are buying it. But Naren, there is also one level of skepticism with the domestic market, especially after the recent numbers. We first thought, okay, the Q2 earnings are bad because of base effect, margins. there were a whole lot of other reasons. Then we got the shock of this Q2 GDP number going down. And now we have the CA also saying that if you guys don't pay enough, then there will not be enough consumption. Do you really worry about the consumption aspect of India, and will that cast a shadow on the way you pick stocks?
We don't worry so much about all these things because finally, at the end of the day, the growth is very much there. Look at some of the areas, look at airline passenger growth or hotel tariffs or something like that. You can look at those areas and be very positive on India. Even if you look at two-wheeler growth this year, I think it has been very good at this point of time. So I don't think really we are worried about growth. We've been worried about valuations and not growth and fundamentals, and the fact that people are not discriminating. So if you look at it, that is the bigger challenge we've been worried about. We have not been worried about growth at this point of time per se, and how all these numbers are calculated is also a challenge actually. So if you look at look at the last quarter numbers, I mean, some of the oil marketing companies moved from a very different number 1 year back to where it is at this point of time.
Yeah.
That also affected the earnings. So you look at banking earnings. Banking is one of the most important indicators of economy. I think those numbers were very good. So isn't banking earnings more important than oil marketing companies? That's how we look at it. So I don't think we are really worried about growth or something like that. We have always been worried about valuations. We are worried about the fact that investor risk appetite domestically is very high and globally for India is not high. It is very low.
Fair enough. Let's discuss the domestic themes in that case. You came up with some examples. If you look at airlines and if you look at hotels, Indian consumption looks very good. So would discretionaries be a good theme? And would FMCG or any kind of mass consumption not be your favorites?
See, basically, we are by nature contrarian. So what we do is we try to see where people are very not so positive. So, by nature, we like areas like rural or, quality stocks or things like that, where things have been negative for quite some time. And therefore, there's opportunity for the future. Whereas we are more negative on things which have done very, very well. If you look at hotel stocks at this point of time, look at the fire CAGR in hotel stocks, it is outstanding from 2020 to 24. So by nature, we believe that some of the very good news gets priced into equities, but that's the nature of the equity market. Whereas if you look at some of the rural areas, stocks like FMCG and all that, we used to be very negative on FMCG, but over the next few years, maybe FMCG kind of areas may be the areas to invest in. And cement could be another area to invest in because these are the areas like mid-cap cement or FMCG and those kind of sectors could be the areas actually where you should invest in because the maximum pessimism areas are always the best areas to invest in. Like in 2020, it used to be metals, telecom, PSU, etc. Today, it could be something else at this point.
Okay. Oh, fair point. That's sane advice, actually, for those who may be shunning these sectors because of this narrative of lower urban consumption. What should be the other themes that you will look at? Will you look at EMS? Will you look at e-commerce? Train our eyes to other such sectors?
You are telling me all the areas. EMS is the other area where the P itself is more than 200, 300.
Absolutely. Absolutely.
No, for us, for example, in 2020, people used to tell us quality is the area which is most favored because they'll never go out of fashion. So the last 4 years, quality has been the area which has done the worst. So we like quality, we like rural, we like all these themes which have done badly. And where we think from here on the outlook would be good. In 2020, we used to like all the opposite of these things. We used to like PSU, we used to like urban consumption. We used to like these sectors. So I would say that, finally cycles play out. There are cycles which are at the bottom. There are cycles which are at the top. We have to be careful in cycles which are at the top. If you look at EMS, today, it is just like 2007 infra. Someone signs an agreement today for the next 10 years. Profits are already priced into the stock on that day. That's the way the sector behaves. And we have seen from our experience of 2007 infra, there is a lot of things which go wrong 5 years after the contract is signed. So that's why we are much more.
Okay. Well, I've used up all my time asking you about equities, but tell us about asset allocation. I mean, would you take a good look at, say, corporate bonds, fixed income, gold? What would be your asset allocation strategy?
We are very fond of multi-asset because it gives you opportunities in REITs. We have been very positive on REITs. We think that we like the entire office space, for example. We like corporate bonds, for example. But the best way to do it is through hybrid funds at this point of time. So, over the last few years, we've been trying our best to get money into hybrid funds because people are just not willing to invest in debt funds. So we thought at least the way to get money in debt funds, debt is through investing in hybrid funds. A particular area is multi-asset because that's the way you can get investments even in REITs, InvITs, exchange-traded commodity derivatives. For example, gold and silver, you would have never got money easily, but through the multi-asset route, we managed to get a lot of money invested in gold and silver in our funds. And luckily, thanks to the good work done by the mutual fund distributors and investors, we managed to make our multi-asset fund a very large fund thanks to the work done by them.
That's a very valuable lesson you're giving our viewers, that multi-asset funds is a concept whose time has come, and there are very good reasons why we should be participating in those. Unfortunately, out of time, Naren, but here's wishing a brilliant 2025 to you and your entire team.
Thank you to you and all the viewers of CNBC. Thank you.
Thank you very much, Naren. We have to wrap up out of time on Bazaar, but Chartbusters coming up after a break.